I meet business owners every day that don't really understand the difference between VAT and tax. So I wanted to run through that with you today so that whether you're a VAT registered business or not, when you make that transition, or if you are new in that process, or just need to clearly understand the difference, let me explain it to you. I'm Nicole. You can find me over at nhb.business and also at Hello CEO. Between those two businesses, we help all sizes of businesses from startups, sole props, all the way up to complex company structures and trusts. But yes, so we have quite a few VAT registered businesses that we look after and quite a few small businesses that are making that transition from not VAT registered to registering for VAT. And it is so important that you understand the difference between tax and VAT because even though they're both a tax in the greater scheme of things, money that goes from your pocket to SARS, they are very different in the way that they operate and how they affect your business, your cash flow, and whether you're actually paying for it out of your pocket or whether it's money you're collecting on behalf of SARS. So let me explain the difference for you. I think everybody understands how tax works, whether you're an employee or a business. It is money that you've earned that you are going to give SARS a portion of. So as a business, we are going to look at our income, we're going to take off our business expenses, and we're going to calculate a profit at the end of the year. And based on that profit, you're going to give SARS some of your money. So it is money that you've earned, and you're going to take a portion of that and hand it over to SARS. Depending on your company structure, it could be anywhere between 0 and 27%. If you qualify as a small business, it's lower, and if you are a company that doesn't qualify for small business tax, it's a straight 27%. So you make a profit, you take some of your hard-earned profit, and you hand it over to SARS as the tax that you owe on your profit. So it is out of your pocket. It is a portion of the profits you earned that you hand over to SARS. That is similar how PAYE works and employees and businesses. So tax in itself is money that you are giving out of your pocket. VAT is very different. So when you are a VAT registered business, when you have a VAT number, you have to be registered. You are going to add 15% on top of your income as VAT. So your income technically should stay exactly the same. If I charged 1,000 Rand for a product or a service before, I'm still going to charge 1,000 Rand for that product or service, but now I'm going to add 15% on top of that amount. I'm going to get 15% more into my bank account, so I still received the 1,000 Rand that I originally did. But now that 15% that came into my bank account is the VAT that I've charged. And it's very important to realize that is not your money. So you have still got the 1,000 Rand that you had, same as before you were VAT registered, but you're now also sitting with this extra 150 Rand of VAT that came into your bank account, but it is not your money. VAT is charged on top of what you invoice, and it is a separate account on your balance sheet because it is money that you now owe SARS. But what SARS says is great. Add 50% onto your income, collect that money on behalf of SARS, hold on to it, but take all the VAT that you've spent and only give me the difference. So you are going to look at your telephones, your bank charges, your computer expenses, your business rent, all your expenses. You're going to look at the invoice and see if you paid VAT on that. Because if you pay VAT on that, you're going to take that VAT portion off the VAT that you charged your customer. So VAT is a tax whereby you collect money on behalf of SARS, you take off the money that you also spent on VAT, and you're going to pay them a difference. So if you got 150 Rand off this 1,000 Rand invoice into your bank account, that money isn't yours to begin with, but you are going to take off all the VAT you spent, and you're going to give SARS the difference. So you might then realize you've spent 50 Rand on VATable expenses on the VAT. You only owe SARS 100 Rand now. So you are collecting money on behalf of SARS, you're taking off the VAT that you spent, and you're only paying SARS the difference. So VAT, in essence, is a tax that you tend to score from, you benefit from it, because you were paying those VATable expenses before you were registered. You were paying VAT on your telephones, your stationery, your computer expenses, all those VATable expenses were there before you were VAT registered. Now you're going to take that VAT off what you collected. You're going to give SARS less than you received. So if you received 150 Rand into your account, you paid SARS, you paid VAT of 50, you're going to give SARS 100 Rand back. So you've benefited from that 50 Rand VAT on expenses that you were paying before you were VAT registered anyway. So VAT is a collections tax. You are collecting VAT on behalf of SARS, holding on to it, taking off some of the expenses that you paid VAT on and giving them the balance. It is not out of your pocket. I think the problem with that is that people have to pay it every 2 months, so it starts to feel like an expense. But when you are doing your pricing, your costing, you need to be accounting for that, making sure that your pricing is correct on the price you charge, excluding VAT. Never bring VAT into the calculation, because the VAT that you receive is not your money. Tax is a portion of your money that you need to pay on your profits. That wasn't your money to begin with, and you will always give SARS less than you received. So that does tend to be a very fair tax, but you are a collection agent on behalf of SARS, collecting VAT for them, taking off the ones you spent and giving them the difference. It's that effort of having to pay it every 2 months that starts to make it a grudge payment, make it feel like another expense in your business. But if you're pricing and accounting for it correctly, you will always pay over less than you received, which means you can benefit from that. So when you're making that transition from a not VAT registered business to now being registered for VAT, it's very important to look at your pricing, look at your costing, and make sure that you do add that 15% on top of your income, so that you haven't created an additional expense for your business, which then does become a burden. And when you're invoicing and costing and pricing, remember to account for that VAT as a totally separate item, so that you're making a profit on the income and expenses excluding VAT, and the VAT is just this little added extra that you set aside for SARS. We have a few clients that successfully manage to take all the VAT they receive as it comes in, put it into a separate account, because then every 2 months, as we then calculate the VAT and advise them of the amount that's due to SARS, it will always be less than that amount that you've set aside. And some of them actually keep that VAT money aside, and what happens is, because there's always some left, you can pay your tax from that. So that would be my top tip for accounting for your VAT. As it comes in, put it into a separate bank account, leave that money alone. It will cover your VAT and your tax, and if your business doesn't have a very big tax bill, there might even be some left. So very important to not account for VAT as cash flow that's part of your business. If you need more advice on how to make that transition, or if you think that your VAT is too much of a burden in your business, you need us to help you look at your pricing, your figures, and just see how we can really get that VAT to be a part of your business and a benefit to your business, because you're getting extra funds, you're taking off costs, and you're giving SARS the difference. So it's just a matter of reframing how we look at VAT. Tax, unfortunately, is an expense. You have to be accounting for that in general. You know that a portion of your profits is going to go to SARS. So that is something that comes out of your pocket, whereas VAT is money that you are collecting on behalf of SARS and wasn't yours in the first place. If you have any more questions on this, please get in touch. I'd love to help you in your business.